Thank you, everybody, for coming. Such a great turnout to kick off the year. If you don't know me, I'm Laura McGraw. I've been running this group for a little over a year and a half. And every month, I'm always thankful and overwhelmed at our turnout. So thank you guys for taking the time. I know all of us are so busy. It's going to be worth your while. William has flown in all the way from Nashville. He's a lender. He's going to tell you about that. Has a really great grasp and take on the economy as a whole. We're going to talk about the macro all the way down to the micro here in our local area and what we can do as investors to be prepared for this upcoming year. And as we always do, I like to start out by having everyone do a quick introduction around the room so we kind of know who's in the room, because there is so much knowledge and expertise in this room and in our community. So I'll kick it off. I'm Laura McGraw. I've been an investor for 10 years, done a little bit of everything, mostly fix and flips, buy and hold, and rent to own. I also run an investor-focused real estate team with Water's Edge Realty in Fairhope. And that's it. Let's go to Dee Dee. I'll have you.
Okay, yeah.
Dee Dee, you want to go next?
Yes, hello. My name is Dee Dee Chase, and I'm new to Fairhope, thanks to Maura.
Hey, I'm Taylor Harvell. I'm also with William at Winstone, and then I also work at First Federal Bank and do just your traditional financing as well.
Robert Nelson, Trinity Capital Ventures, in the private lending space.
Marcus Allgood with the Moore McGraw team and the buyer's agent, looking for houses all the time for this guy and other people.
Dustin Patterson, focus on flips and burgers mostly.
Hi there, Jennifer Huber. We come over from Mississippi, and we do hard money, private money, and creative financing for unbankable brand and hybrid investing.
Yep, hi, I'm Amy Brandt, and I've been investing in real estate for 28 years, and as a lender in creative financing, so we specialize in when the banks say no, we say yes, and so lease, option, and any house that you choose. So it's really creative for our hybrid investors.
Hi, I'm Lauren Burgess with Innovate Real Estate, and to help people save money on taxes with investment property and commercial property through different tax strategies.
Hi everybody, I'm Alvaro Lodina. I'm trying to be an investor and trying to learn as much as I can.
I'm Jerry Lester, just moved to Daphne this month actually. Just getting started in the real estate world here. Using this opportunity to get introduced to folks.
I'm Gina. We've actually been investing in Texas since the 2000s, but took a hybrid travel the U.S. for a few years and decided this is where we're going to be. So we're excited to meet, and we need all of you people because we don't know anybody here. We're just getting started.
Welcome to Daphne.
Thank you.
Yeah.
Hey everybody, I'm Bridget. I am a realtor with Wellhouse Real Estate. I have been in real estate for 7 years. I have Airbnbs, I'm a property manager, and also a home builder.
Tom Gallagher, my company is Fairhope Mortgage. We specialize in DSCR loans and fix and flip loans for investors.
Matthew Huff, I also work with Tom at Fairhope Mortgage and I'm also a local investor.
I'm Michaela Hardy. I'm a realtor at Roberts Brothers. I'm new to it, but I would like to get into house flipping and investing in real estate and just networking.
David and Kathy, this is Nishant Lucky, we're real estate investors.
Eric Ed with Shop House Properties. We create great spaces for great local businesses. We focus in commercial real estate, but we also have an ongoing house flip in Fairhope right now.
Hi, I'm Amanda Eckert. I'm a real estate agent with Real Broker as well as a real estate investor who invests here and also in other states and helps investors from out of state find our beautiful spot down here in Florida, Alabama.
Kurt Daniel, I'm an investor.
Hi, I'm Mitchell Moore. I'm an insurance agent with First Baldwin Insurance, and I focus on commercial property, multifamily, condos, commercial strip centers.
Cassidy. I'm a licensed realtor or real estate broker in Alabama and Florida. I'm also an investor who does fix and flips and buy and holds, and I also work with the biggest wholesaler in the South to where we bring several hundreds of deals off market to investors every single month.
And Jeff Johnson, also, this is my wife, and pretty much same deal, invest in real estate, buy and holds, flips, stuff like that.
Andrew Fowler, I'm here just kind of learning, meet new people.
Kevin Lundford, I'm a local investor for being Grand Bank, also own a construction company and an investment company as well.
Hannah Zinsky, real estate agent, but hoping to move out of that into the investor world.
Pierre Sammy, I'm a real estate investor and also a contractor.
Alexandra Madison, I'm a realtor and I also assist with tenant placement and looking to get into property management.
Matthew Haddon, I'm in Fairhope. I've been investing in real estate since 2008. I actually have a couple of new construction single-family homes for sale right now. I'm willing to offer seller financing on one of them. Both of them are priced below market value, so if anybody's interested or knows anybody interested, please reach out to me.
Okay, before we get into the presentation, I just want to thank all the people that helped make this possible. So let's start out with our sponsors. So Windstone, William and Taylor, they are presenting but also sponsored this event, which means they provided all the food for us. So if you walked in during the intros, we still have several of our nice boxed Chick-fil-A lunches, so make sure you get a lunch, either now or on your way out. Stephen Hines does all our photography and videography. He's amazing. All these are published on YouTube every month, so for anyone who can't make it, you can always go back and watch it. Or if something was said and you just want to go back and jog your memory, you can find it on our YouTube channel. He's an amazing real estate photographer. We use him for all of our listings. He does amazing work. Photography, videography, can't recommend Stephen enough, and he does this every month for free, so seriously, Stephen is the best.
Thank you, Stephen.
Thank you. Well, I paid him.
Yes.
It was last month, but I paid him.
Okay, that's it. Let's
All right, let's do it. First off, I want to thank Mara. Thank you for setting everything up. I want to thank all of you for being here. My name is William Barrier. I work for Windstone Private Lending. We specialize in short-term debt, fix and flip, and some smaller spec on the new construction side. I'm pumped to be down here, escaping the ice storm in Nashville with some good weather down here. Unfortunately, I've heard I'm bringing the cold with me down here, so do apologize for that, but I think Mobile and Baldwin County especially is a really intriguing market, and very attractive to do business for investors, corporations alike. The infrastructure is great down here. The weather's great down here. So let's get right into it. I want this to be interactive as possible. So at any point, if you feel like I missed something, you want to interject, feel free to do that. I will not hurt my feelings. So let's take a look back at 2025. Transactions were a little slower. Buyer pool was kind of drying up as home prices hit historic highs in Q2. That combined with high interest rates really tightened things up. I think especially for potential first-time home buyers, they stayed on the side, really strengthened rental demand. Debt holders locked into sub-4 mortgages post-COVID, stayed put, inventory stacked up, days on market increased. The buyers that were out there were particularly picky, and they were looking to check every box and meet their best value proposition. If they didn't get that, then they just walked and are still waiting for opportunities. And so kind of where we saw our success, as a lender, I only get to see the bird's eye of this stuff and not the nitty gritty. So, feel free to chime in on where you saw success and didn't down here. But for us as a lender, we love cookie cutter. It is what it is, traditional floor plans, brick ranch, in a soft market. We like to say functionality over fashion. It appeals to the masses. It's easier to comp and thus get financed. Price points that worked for us this year, 200 to 250,000. The largest buyer pool, some first-time home buyer in that as well. Also, it's a flexible price point where, if the market's not taken to your property, you can refi and get renters in there. And then, the location down here, west of I-65, I know that's very broad, but just very conforming neighborhoods with lots of transaction volume that helps us really de-risk our investment there, getting fresh data and turning over properties. So looking ahead to 2026, supplies increasing towards more of a neutral market. I think most analysts think mortgage rates in 30-year fixed are stabilizing, anywhere from 5.9 high fives to low sixes. I think sideline buyers, obviously, lower rates would be great for everyone. I think we all know that. But I think they just want some reliability on these rates where they can, comfortably predict what they're able to afford, so they can budget ahead and then execute based on their price tolerance. Wage growth is outpacing price growth in real estate. So that's more purchasing power for the buyer, more money in their pocket as the labor market is improving. All these people locked into mortgage rates, whether that be late 2026, early 2027, they're eventually going to be back on the market just due to different needs, life events happening, kids coming, etc. And they'll be able to be more mobile during that environment. A lot of them have a ton of equity built up in their homes, so they're able to kind of absorb their higher monthly mortgage payment. And this is just a little chart showing the percentage of income people are spending on their mortgages is starting to decrease. As you can see in 2025, they're expecting that to keep decreasing in 2026, kind of looking for a slow rebound to the market. A few things I wanted to touch on the legislation side, a few key components of the big beautiful deal, one being the QBI deduction. You can deduct up to 20% of qualified business income on your taxable income. And rental and development income does qualify for this. So I think that's super important. Both of these, especially if you're in the buy and hold game. Another one is 100% bonus depreciation on property improvements. So if you're a buy and hold investor, looking to replace a roof, add HVAC, you can deduct that full amount in the first year. And this is just something I thought I'd add in. It's really, more related to the macro environment, but an executive order was signed recently that's looking to prevent institutional investors from purchasing single-family homes. And if you look at your sheet, Mara did a really great job on the handout opportunities in Mobile and Baldwin County. So I think it'd be right to touch on some of these. One being the expansion of the Port of Mobile. I think it's a huge need for rentals, to house the workforce there. Relocation to the airport to downtown, and just their revitalization plans for downtown and Mobile are stunning. I think that's going to drive a lot of property appreciation, tourism, etc. Construction of the Mobile Arena goes along with that. I think there's going to be a lot of opportunities in short-term rental, Airbnb, etc. for concerts and other events. And then the aluminum plant in Bay Minette, creating 1,000 jobs. I think Mara said that's the biggest economic investment in Alabama's history. So I think that's pretty special to have in Baldwin County.
And a housing shortage.
Yeah.
Housing shortage in there.
Yeah, and then the expansion of the Airbus assembly line, creating another 1,000 jobs, and there's a ton of manufacturing, engineering jobs in there that I'll be looking to purchase in the mid to upper price point. I think keys to remember right now, I think having realistic expectations is more important than ever. I refer to this a good bit to investors, the one in the hand theory. Everybody's heard that growing up. One in the hand's worth two in the bush. Based on your price point, is it worth taking an offer not exactly where you want to be and cycling over to your next deal? Or do you want to risk having that property sit another month or two on the market? And, I think that's dependent on a few things. One, is your maturity date coming up? Are you having to pay for extension fees? Is it really worth that monthly nut on interest burn to get whatever it may be, 10, 15K more on the ask? Everything you should do as an investor should be based on hard data. I'm sure y'all are well aware of that. Don't try to extrapolate. Generally don't try to be the highest purchase price in the neighborhood. I would say just go for small wins right now. Keep cycling over to your next projects and keep using the most recent data. And if you're cycling projects, that really allows you to do so. So I want to touch on our product real quick. I know that we have some lenders in here as well. So really our typical investor is a scaling investor looking to maximize leverage, minimize cash to close. We finance 100% of costs of the purchase and rehab. Our interest is as drawn, so it's not full note. You're not paying interest on the full note until those funds are drawn. We balance sheet all of our loans. We can call our money super quick. Can close in 1 to 2 days. We reimburse same-day construction draws, no hard credit checks, no minimum credit score. Going back on, when I say balance sheet, all of our, from valuation to post-close is all in-house. If you're wanting a payoff to refinance or if you're looking for a draw, you're always going to be dealing with us. So it's really an easy and convenient product. If any of y'all are interested, I'm sure we can make that connection after this. And really quickly, I just wanted to do this little exercise here. Let's see. And just kind of go through what I kind of see from the lending side. Let's see. I haven't gotten on a Mac in years, so excuse me. Oh, I don't think we are. I apologize.
Here, I'll fix this.
Oh, no worries.
Well, how about I fix this and you can...
Yeah, absolutely. So what I'm about to show y'all, we have a valuation guy that, can run all of these fancy numbers and adjustments based off price per square foot, yada, 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 but you can really make it easy as you want to by when. Y'all know all this already, but looking at active inventory is just as important as comps sold. As is comps are super helpful to make sure you're buying at the right price. And I'm going to get to that in a second. Perfect, thank you. And so I'm just going to use this example. This was one of the first ones that I found the other day when I was taking a look and coming up with this idea of doing a lob underwrite. Let's see. And I think we're all aware that you're going to find more opportunities off market than on. But just for the sake of showing y'all something, I think this would be super helpful. So we have the property listed for 149. First thing I look at, how long has it been on the market for? Kind of seeing how much traction it's gotten. I believe that's on here. Yeah, 72 days on Redfin, 250 views, 12 favorites. You know, not a crazy lot of action on this one. It's turnkey, definitely still needs a little bit to be more of a high-end flip. You know, for the sake of an argument, it being turnkey, you know, I think you'll never know until you get a bid from a contractor to go out there, but let's just say it's $30 a square foot. That'd be about $36K on the rehab. So, I mean, you can go based off that. You already know that the property's a little high. And, you know, when we talk about being conservative on your underwrite, the first thing that you're going to see, and the first thing, I mean, I see, you're going to look for comps around where you think you're going to exit. You know, so you have this one, that's solid work on a flip. About 200 square feet bigger, sold for $223. You have another one for $220. I think that's a better comp. It's closer in square footage to us. And then you have one right here. That's more of a turnkey. The kitchen's not really updated. And then you have one on the subject street. That's also kind of turnkey. Lower end flip, looks like butcher block, countertops. And so you have 4 different data points. There's enough data in this pocket of the neighborhood where you shouldn't feel the need to go outside of it and risk any flyers or anything like that to skew the data. So in there, you know, it doesn't look like a bad purchase as long as you can get the price down, obviously. However, I want to show you this. This data, that's not that old of a comp. It's about 3 months old. That one is about 3 months old. And then that one's the newest one. And you know, when I was going back through this, I thought that the best comp is this one, no doubt. It's the closest in square footage. It's on the subject street, but if you look at it, that's almost a year old. And I mean, I think we all know that the market has changed drastically since March of last year. So, I mean, you can almost throw that data point out. Next, you want to look at stuff on market. You got this one that's a little bigger. That's a nice livable house, minimal work done to the exterior. And then you have this other one for $209. That's bigger as well. So, I mean, where you may, based on this comp and this comp, you may think your ARV is 220 plus, but based on more recent data, why are these active listings that are around 200 that are bigger than you not selling? So, you know, I'm sure all of you know this stuff already, but you know, I think it's just important right now to look at what's on the market rather than what's sold. I think it makes just as much of a difference. So, I mean, I would say, you know, we're around 200K, maybe like 195, 190 on the ARV here. You know, with 36K and rehab, you know, you're really going to have to be down to that 110, 105 range for this deal to even make sense. So, yeah, I just wanted to do that. It's just like an illustration of me as a lender, how I look at deals. You can make it as complicated or as easy, you know, as you want. So that's just kind of how I screen deals, and I just wanted y'all to see that, you know, just so you know, and I think other lenders screen the same way as well. So, but yeah, if anybody wants to shoot out any questions, feel free. So.
have one. Do you typically have a price for rehab based on price per square foot?
Yeah, I think it's helpful. On turnkey, it's going to be a little bit less. For a full flip, I mean, typically I like to see 40 to 50 bucks a square foot, I would say.
A full flip, is that complete rehab?
Yeah, complete rehab.
I got one. Normally I would went to Zillow, but you went to Redfin. Are you seeing a big difference between the data?
There actually is some. I like to use Redfin for Alabama, South Carolina. That doesn't really come into play for you guys, but I think in different markets there is but better data depending on what site you do. And I mean, just for me, the functionality of Redfin's a little bit better in my opinion, but that's personal preference.
Do you lend on tiny home communities?
We've come across one scenario. We didn't have any takers, but I mean, we're super flexible. If the comps are there, that may be something we can get comfortable with.
Thank you.
How about manufactured homes?
Yeah, absolutely. We'll do 100% of costs on manufactured homes as well.
Do you need an unconditional Alta 7, or does it have to be retired, or can you do it on one that's like a more recent home? I've always done that.
Yeah. You can do both. On the land home package side, new, or you can flip them as well. So both of those.
How about mobile home parks?
So we're limited to 1 to 4 units, single family. So we're kind of limited on that. We could help you do them one by one. That's probably not something you're interested in, but yeah, we're limited to 4 units.
How does the underwriting, is there any difference between underwriting a deal that's going to be a burr versus a flip for a client?
So for us, I mean, yeah, it's definitely helpful to look at both sides. For us as a lender, we're doomsday salesmen. We have to look at the worst case. So, if there were ever a situation where we had to take the property back, we have to look to resell it. We're not in the business of cash flow or anything like that. We're not property managers, we're lenders. So primarily resaleability. It definitely does help to see rents though, and kind of reverse engineer the numbers, but mostly resell.
On the mobile home side, if you've got property, you're saying you're funding like a new mobile home to come in there and be established?
Mm-hmm.
Okay, when y'all fund that deal, do you have a list of lenders that will refinance to get you guys paid back? That's the issue that I always see. Nobody wants to carry the loan on the mobile home.
Well, most that we look at are flips. I'm sure my boss does have contacts that can do the long term. I personally don't. Most situations that I come across on the mobile side are flips.
Tom, don't you do mobile homes?
Yeah, I do mobile homes for people to live in, primary residence. I do have one lender that'll do mobile home investment property, but it's 35% down, and the minimum loan amount is 125. So it's not very attractive, although we can do it.
Do you also offer the new construction on the manufactured home?
Yes.
And is that also 100% financing?
Yes.
Do you pay off the floor plan source on your first draw?
I'm sorry, answer that again, or ask that question again.
So if it's direct to dealer, are you paying off the floor plan source that they have on your first draw? The land and?
So we're funding the land first, and typically we'll front like a 50% deposit, and then the other 50% once the build gets on site.
Perfect, thank you.
For the flippers, can you talk about your draw schedule or how that really works? If any of our flippers wanted to do your construction loan program, what are the logistics of that?
Yeah, absolutely. So our director of draws is literally in the office right next to me. all day he's reimbursing those, approving them. Right now we're working on a software that's a loan origination and post-close. It's still in beta, so I mean we're looking at end of spring for that to get rolled out. So I mean right now we're super old school. We have an info account. You submit your draw request with photos and receipts. If you submit that by noon, it gets reimbursed same day. We're really saving our investors weeks on their rehab. I've been in a few situations where we've refought out other lenders. They're waiting a week, 2 weeks on draws. Their subcontractors are getting unhappy. They're quitting. It's hard to find labor. So we really are a solution to that.
Is it a cost per draw?
No, there's not. There is no draw fees. Our origination is more expensive up front. That's inclusive of all our costs. You can take as many draws as you want. But yeah, we're not going to say $1,000 underwriting fee, $750 appraisal, yada yada yada. It's all inclusive of our process. We're not going to try to backdoor you. Our cost is what it is.
What is your origination fee typically?
It's 2 to 3 points depending on loan term.
Interest rate?
Typically 13% APR.
What states do you lend in?
So we go by a city approach. In Alabama, Mobile, Huntsville, some Birmingham if it really makes a lot of sense. In Georgia, we do Atlanta, Columbus. South Carolina, we do upstate and Columbia. North Carolina, pretty much everywhere as long as it's off the coast. We do Indianapolis. Columbus, Ohio, Dayton, Ohio, Cincinnati, and then we also do Northwest Arkansas.
Thank you. I heard you say something about a no credit score. For the no credit score, what is your minimum requirements for experience? Experience is preferred. We like some type of real estate experience. So whether you're a realtor, you may qualify without having a flip on title. If you're a contractor and you've done work building houses, rehabbing houses for others, that's somebody who may qualify as well. So we like to see some type of rehab experience, or real estate experience, sorry.
Do you allow other lenders to broker to you?
Yeah.
Do you have loan minimums or maximums?
We don't have a set loan minimum, but I mean it's around $75,000 is our minimum. It's kind of like an unwritten thing with us. It's not an established like floor or anything. Our loan maximum, for let's say somebody comes to us with his first deal, it's going to be a max of $1 million. So nothing above that until we have a track record.
If you guys have more questions, William's information and some stuff about their loans right here. I thought it might be good to have maybe just more of a discussion about lessons learned from 2025 and what each of us has seen or thinks might happen in 2026.
Yeah, absolutely. Does somebody want to start on that? What was successful for you? What wasn't? Like as I said earlier, I don't get to see a lot of the nitty gritty down here, just the bird's eye view. Get to see the rehab budgets, the numbers, etc. Watch the property progress. But the day-to-day stuff on the front end, I think y'all are probably better equipped to discuss. Does anybody want to jump on that?
I'll start it off from just some of my lessons learned from 2025. And I'm really curious to hear what some of the other people have experienced in the room. So 2025, what I saw was selling like the product that was below the median sales point, which in Mobile is $250,000. On this side of the bay, it's $350,000. Stuff below the median was selling okay, and actually, especially stuff below $200,000 in Mobile was moving well. And then funny enough, like the luxury end of the market was still moving pretty well. Then there was like the huge stagnant middle, where if you had stuff in that middle price range, like 250 or 350 to 750, it sat. I think probably because the like working and executive class are like highly susceptible to interest rates. So that was my one huge takeaway. But I want to do a so I saw a lot of myself and my clients shift some of their strategies more into the BRRRR, you know, less flips, more BRRRRs in general. And I want to just talk about that, what you mentioned with the big beautiful bill and the 100% bonus depreciation tax write-off. So I've started using that with some of my clients. I want to give a shout out to Lauren and these ladies at the end. We've really started using that, and it's been super beneficial for our clients. So if you're seeing this, you're like, how do I write off all this money I'm putting into my BRRRRs? You need to talk to Lauren and Rob, and they'll literally walk you and your clients through the steps. We've saved a lot of money. So that was a huge benefit and a takeaway this year for me. And I don't know, like, I guess for me and my clients, like, our lesson learned was like, stay out of the middle. Hopefully that will change this year. And I think in some areas where we have a lot of big economic development, I think that will change, but I don't know. That was my take. I'm interested if people agree or disagree.
I agree also, and I think the reason you weren't seeing those move-up buyers in the big price points was interest rates, right? They had 3% on their primary, and to move up to a house that's $100,000 or $200,000 more was going to double their mortgage. I'm starting to see those move-up buyers come back into the market now, just in the last 3 months.
I also think it was a better year for Barron because of the fact of you going in running numbers thinking it's going to be a flip deal, with the market changing, you know, it's sitting. And that's something he was talking about, working numbers the way that he was doing up there. That was kind of for a flip deal. People need to keep in mind, like new investors, that you need to structure, when you got an exit strategy, you need to structure that deal, or either you're going to flip it or you're going to BRRRR it, because when you go to get a loan, DSCR or whatnot, they're not going to give you but about 75% loan value. So you need to make sure those numbers work and you don't get stuck in a deal that you're like upside down in, losing money.
And have that plan B.
Yes.
Oh my God, like,
Yep.
yes.
And make sure the numbers work before you get in it.
And I will add in, I don't know if I'm the only one in the room, but like I met Windstone several years back at an investor meetup, and we have done several deals with Windstone. Always been super smooth process. I recommend them to any investor that I run across. So.
Yeah, they're excellent.
Thank you.
And Taylor is our local person for Windstone.
I'm friends with this.
I don't know, any other lessons learned from the investors, agents, lenders in here?
I had something that went good last year that I feel like it's going to be trending down this year, and you kind of mentioned it in a positive aspect, but in Mobile, at least for short-term rentals, I see a lot of people, like investors, that pay, first of all, they pay like high prices for it. And I've done it in a couple markets, and they can take it away really quickly, and it looks like that's the direction that Mobile is going. I know people are fighting it, but I have a decent amount of Airbnbs, so I'm kind of pivoting because I don't think it's worth the fight, because eventually the city will probably win. But I'm curious to what anyone else thinks about that.
Yeah, I'm on that page. I'm buy and hold and turn money to Airbnbs, and it's been beneficial.
Awesome. What areas are you guys doing your Airbnbs in right now?
I met most of mine are in Mobile or Fort Falls area.
Cool.
Yeah, downtown, midtown. But the city's like, they're already trying to enforce some stuff. And I had this happen to me in Albuquerque, New Mexico, and they could pretty much, if they decided to shut you down, like you're pretty much in trouble. So anyone that wants to get into it, I would just say run your numbers like a long-term rental, so you at least can get out or sell it, whatever.
But instead of your houses sitting, you can always Airbnb them and make money off of them in the meantime.
And what areas did you say yours were in?
I'm in Mobile, Taylor Falls area.
Okay.
Oh, and if anyone has land in Baldwin County, I'm remodeling the trolley for an Airbnb, so.
Cool.
I need some land.
I think one big lesson for me was do not take the time frame of the flip and the time in which you'll be listing it for granted. I think a lot of people don't thoroughly think things through. I see a lot of investors who buy 6 deals at once without and even if you're going to do that, at least be intentional about the order in which those are going to be ready and released onto the market, because certain houses might be okay with, a late November, December list, and other areas and price points that are just going to be really dead. So I would just be advising you to be very intentional about time frame. And then also, as quickly as the market changed last year, if we talk about a deal and the comps are this way in January and you don't actually get around to the market till the next November, I'm sorry, but those are no longer comps. So just be very intentional and think about time frame.
I would say for us, one of the big things that we have found to be very innovative for our real estate agents that have their properties on the market and investors, like we have one right now that is an investor who bought 2 flips in Texas, and then when they put it on the market, it just didn't move, so the market shifted a little bit. And so for the marketing that they are doing now for lease option, because we know that 65% of Americans do not qualify for traditional mortgage, and that's where we're able to help her to market as a lease option. She is definitely our hybrid investors who want to be hands-off, or like they can do their W-2 job and still be able to make immediate cash flow and a bump on the end, so that slow flip. And so that really is changing our look and how we're able to really help and serve not only our real estate partners, but our hybrid investors to be able to have immediate cash flow and a bump on the end, and to be able to serve families in a mighty way that no one else can be able to do. So it's moving houses, but it's also putting families in houses that wouldn't be able to be.
Do you know very much about the structure that they've put together with what's the down payment like?
10% minimum and $200,000 is usually our minimum purchase price. But I will tell you, the marketing in that, a lot of people don't think that they can buy, so they're not coming to you as a real estate agent, they're not coming to you as a lender. So when you start marketing that way, you become that person of influence. So I would say 80% of your buyers can buy, but they just don't know that they can, or they just need a little bit of tweaking. So it is a part of the marketing strategy more so, but absolutely all day, every day. We can close it in 3 weeks for any single family, an investor side too. We do duplexes, so 2 investors to come in to be able to really make that difference that they wouldn't be able to do. So 10% is the minimum down.
Thank you.
We don't really care either about their credit score. It's really about their story. So like a lot of us in this room are 1099. You might make great money, but you look terrible on paper. So we can get you a loan.
Amen.
So without, what is the application process for those folks then? Is it more similar to a rental application?
So we do a little bit different because we set you up for success, because the whole purpose is the path to home ownership, right? And so a mortgage loan officer actually certifies, driver's license, social security card, pay stubs, bank statements, tax returns, issues an MLA, tells them the plan that they need to do to be able to take that. So if they need a year, we give them 2. If they need 2, then we give them 3. Our hybrid investors are sitting ready to go with a DSCR loan to be able to leverage. They're putting 10 to 15 to 20% down. So our hybrid investors love it. So when we call them and go, hey, we got a property, here's the family story. And so our real estate agents get 100% of their commissions. The buyers do not get charged anything. The hybrid investors love to be able to, to pay that because we're making money for them. And we just do it over and over and over. We have one investor that didn't even know what sheetrock was, and he's on his 15th property, and he's helping a lot of people do it.
So even for those people that are doing, the BRRRR method, right? If you're really looking for a way out, and we talked about the big, beautiful bill, you've heard Trump say 40, 50-year loans, right? It makes things really more affordable. So if you're doing a BRRRR and you want to do a lease form with an option, and you're making that money, right? You get to charge the interest.
Well, that flipper was actually gonna be upside down. Her real estate agent was just telling her to drop the price, drop the price. She was gonna be in the whole like negative 35K. And now she can take that, she's doing a DSCR loan, we're advertising as lease option, she's gonna get 10 to 15 to 20% down, she's gonna pay her real estate agent that's marketing that. If it sells, okay, great, but if not, she's not just lowering the price and cutting into her profit. And so now she has a lot of other opportunities to be able to take something that she was gonna lose money, and now she has about $850 on a cash flow with about a 30 to 40K bump on 2 years.
And what a great way to help our neighbors get into it.
Right, and then you don't have to be able to do the landlord stuff. She's not getting the call. We have one in Texas right now. She put 100K down. We actually got 20K at the closing table, 900 on the cash flow with the $40,000 bump on the end. She's full circle right now, a year and a half. She's at the HOA meeting. She picked the property. She did all the stuff. Her agents helped her, and she's coming full circle doing the mortgage now.
I want to give you guys a round of applause.
Yes,
Yeah.
and actually, you know that Jennifer and Amy are teaching a workshop about this in April. So they're gonna be our speakers in April and do a whole creative finance workshop about this and some other stuff about how to do it. But I mean, I'm sure you guys have seen that as agents. Haven't you seen a lot more people asking for owner finance?
Yeah, absolutely.
So that's what we.
Well, and this is so great because usually in the number world, we think a lot about what would be great for, you know, our pockets, but it's really great that there's something that is so good for our community as well. So thank you for offering that.
You're welcome. Listing agents love it because it really gives a huge advantage of what you're doing for your sellers and how you're being able to bring a lot more buyers who never would have thought that they had a chance. It also works really, really well when you're trying to sell and maybe something happens and you can't sell because you can't buy, and now you get the listing and the sell and you're able to help, you know, more than one way.
And Amy and Jennifer are mortgage loan officers and real estate agents, so they understand the ups and downs and diagonals of all the opportunities with real estate.
And I just ask, on your short-term rentals, are you taking the professional deduction? Because Lauren has big bonuses.
Yes.
If you're taking that professional deduction.
We're working with Mara's father right now, and I was on the phone with one of our tax vendors, and we're probably saving him $6 million on one tax service for his multifamily new construction.
It's so crazy. Like from the Big Beautiful Bill, I mean, Lauren and Rob do, you know, the small to the biggest deals around the country. But even just with the deal we did with my cousin, we used 3 different tax strategies, saved $100,000, like on one duplex in Foley. Because we used 3 different tax strategies that are all like new and come together now because of the Big Beautiful Bill. So cannot recommend them enough, and hopefully it'll save anyone who's doing more burrs. Just make sure there's like so much more tax savings now.
Yeah, we just sent you someone with an RV park. What were they gonna save on that? The guy had never heard of cost segregation, nothing. I'm like, oh my gosh, you're losing so much money.
Yes, Nick, several $100,000. The RV parks do really, really well, especially if you renovate them too.
Yeah, we do the lending on RVs and mobile home parks, and so we just send, you know, we get opportunities to be able to cross back and forth. That's what we're doing.
Yeah. Love Jennifer and Amy, they've helped out so much. And I just sent them a private investor the other day too.
Very creative.
Now, when you say you do the lending on RV parks, is that like private money purchase and to rehab all that and then refi out of it?
Yep.
Cool. Well, we have the room till 1:30, but we can just open it up. People eat all this food and just have open networking time. And thank you guys so much for coming. Next month, we're having a guy come in that uses new construction, investing with new construction is a topic we haven't done yet. This guy, he buys all new construction and uses it for long-term, short-term, and rent-to-own. He does all new construction. So really interesting, and I have to say, even me and my team, we had kind of written off D.R. Horton and a lot of the new construction for our investors, but now the turntables have turned and the market has turned, and there are some really good deals in new construction now for investors, especially if you need appreciation and some of these other tax benefits. It's something that I think we need to know about, and definitely something to consider. So we're gonna have an investor come in who specializes in that next month, and talk all about it. So thank you guys for coming. No money left.